Welcome, guys, and welcome to another episode of Crypto EMC. With me is my buddy Lee, Bull Lee
Hello,
for
hello.
today. How are you doing, buddy?
Good and you?
Awesome. It's Friday. It's been our second week now, and what a ride! What a ride! We're getting better at this. We're remembering to press the right buttons, and we're slowly but surely getting our ducks in a row. And happy to say that it's been a blast. So I really want to thank each and every one of you guys before we get into this. And Lee, maybe you want to add on to something there.
Same. Really appreciate all those comments. Tweet or either with Twitter, the YouTube video, the comments. We do read all of them. Even we don't have a lot of time to respond to all of them, but we do really read it. And thank you guys for all the kind words.
Awesome. Yes. Guys, so I think what we want to do is to end off the weekend. We normally have a big question. I remember when I was still trying to find my feet as a trader, Lee and you as well, come weekend, and you kind of worry because weekend it's a different ball game. During the week, everything has got structure. We've got routine. We've got all these things. But weekend brings a completely new dynamic to trading. Now you've got family responsibilities. You have to take the kids to the movies. There's all these things. What do I do with my crypto? It's not like I'm sitting in the office with one eye on the screen all the time. And so for the weekends, we kind of have to have a better plan and a different strategy in mind. And to do that, we've learned a couple of quirks and tricks over the years, and we also learned to say no to some trades, especially if we know we're going to have a busy weekend. Um, Lee, maybe if
Yeah.
you bringing up your corporate
Weekend is
chart.
like this. Every 5 seconds, you look at your phone.
Yeah, my wife tells me now if
Yeah.
I see that phone, that's trouble. And you're not allowed to take it to bed anymore either because the alerts and all the trading view stuff goes off 5, 6 times at night, and then you wake up, you run down, look at the screen, and then nothing happened, then you run back up. We've all gone through that. Are you doing that now though? Is it that crazy anymore?
No,
Have to, or
no, but
slow
I do
down a
I do
bit?
look not every 5 minutes, but maybe every 15 minutes.
So you've improved by about 3 times. So
Yeah.
and that's the thing as well. I think Ivan on tech said it beautifully when I was still watching him learning about blockchains and stuff. He said if you don't wake up and run to your job, you're doing the wrong thing. And that's kind of the thing I do. I wake up, I just first check where's Bitcoin, and then I see if my wife had a good night's rest. And that's probably not the thing that she needs to hear, but that's the reality of what crypto has been doing for me and why I'm so passionate about it. Lee, buddy, I'm going to bring up your chart and let's maybe have a look at some direction before we start and take it a little bit easy and look at some alts. The idea for today's show, the guys, the takeaway is we want to be looking at some alts. We want to see and we look at some possibilities, how we can protect ourselves over the weekend for the trading capital. Investment wise, there's not that much. It's not a big pivotal area, but we always have to be prepared for the worst, and then get surprised why the best happens to you. And then we're gonna flip over, and I want to ask you guys to send in your questions. We've got people here on the back end of the stream also monitoring the questions sent in, and we've got the questions on Twitter we're going to work through. So some of them are really good, I have to say, and some of them are really insightful questions that will not necessarily get uh, justify a simple one-line answer from us. So if we glaze over your question or don't touch your question, we did read it and we will get to them. And that all your questions are important to us, guys, and we really thank you for participating with us. So Lee, there's your screen, buddy. Let's quickly zoom in there. Maybe you can zoom in a little bit while you start giving us a lowdown on Bitcoin.
Yeah. So Bitcoin, same situation. We are expecting this retracement, like we said yesterday on Bitcoin on our episode. As you can see here, we struggle to go above this white line and especially this red one, which we marked 65,864. So in order for us to have a bounce back up, we need really, this is the key area to hold. for BTC to go up. So the buyers was really weak, so we did not go through. So what then? They are going for liquidity in a lower price range. These were the areas that we also spotted yesterday, Rudo, which is the 50% of that candle. It also looks very weak for me as a reaction here. So I'm not convinced that this is gonna even hold as we speak right now.
But
And basically,
sorry, Leo, I don't mind interrupting you. Can you, before you say it, we go and have a look at the 8 hour, because we haven't discussed this actually, and then look at what's happening over there regarding that that zone that I'm talking about, and that gives us a little bit of hope.
can you see?
What I actually wanted to, so what I want to show you there, if you look at the RSI and where it closed in relation to where we're at now. So there's still 4 hours, a lot of time, but we are slowly but surely locking in some bullish divergence. But remember now with this picture, I want you to go back to your 1 hour and continue the thought. But now you guys have an idea of the scale. It might take another 4 hours before we actually really know whether it's going to move against us or whether it's going to start bouncing, because the analysis was done on an 8 hour time frame.
Yeah. So 4 hour time frame, we're gonna have like before the end of the show, we will have this close of this candle here. So let's see where the price action is gonna be. For me, we are still in the middle of nowhere. Yes, we might have a hidden bullish divergence here, but is it really a continuation for momentum to the upside, or are we already starting a bearish momentum here from the top, the short-term bearish momentum? So 4 hour, you have this confirmation. I mean, 1 hour, nothing much in my opinion from here. This candle 20 minutes, it looks bullish, but I've seen so many times this kind of candle forming like a like a U shape, a V shape, small V shape, and they come back for like shakeouts, stop everybody out, and then go up again. So let's see. I'm not confident. I mean, on 15 minutes, yes, it was a brilliant trade to take, but I would like to protect already. The trade.
Yeah, I think one can move one stop below those levels. What I want you guys to have a look at, if you can zoom in on the last 3 candles that you've got there. So I just wanna bring this. Remember, we touched on this yesterday, where we said the truth is where momentum lies and how we can just remember. I trade with my strategy, and mine's saying that's a buy. It means that still doesn't mean that it can't get stopped out. But for me, what I'm going to be looking at now is that top of that engulfing red candle that you've got there, the third candle from where we are now, that one, yes. So that's 64935. What is important for me, guys, is that we get above that level now from this point onwards. If we don't, it's a failed analysis, which means then we'll most probably be going and getting some lower lows and start getting into the larger time frame targets, which I still believe is going to play. So this is a trade scenario, and on the time frame that I done it was where I envisioned this was for a trade, and trades do fail, guys. But taking how many gains can we put out of the market out of this little run? If you just mind measuring for me there.
1.6.
Yeah, 1.6 for where we're at now. Stop limit below the bottom of that last red candle. So it's still.
Which one? This one?
Yeah, yes.
52.
So 1, 2, 3. So 1, 2, 3. So at the end of the day, it's not big money. It's not life-changing money. But what we like to do is we like to take these little stabs at it. Not with big money, little stabs at it. Because when it sticks, you've got a position to build on. Okay, Lee. That's all that I think I want to add on that. Maybe we can move on.
Okay. For me, I'm more looking at the long-term trade. If this plays out, I'm looking at least at if 1, 2, 3, even ABC 1, 2, 3, like this. I'm looking more at the down. And I see you posted somewhere also, Rudo, on your Twitter or somewhere.
My large time frame is sitting there by your 1 range.
Yeah. So large time frame, I would like to take a trade at just below 60K. Basically, in this range, and maybe at the end of this weekend, so, if it comes below 60K, I'll be ready to grab a deal, to grab a buy for much longer, a longer trade, maybe 1, 2, or 3 days. From that move here, and be at 59, between this 59 and 60K range. And in terms of time, I would like to see it happening maybe this weekend. So I would say I'm expecting more, a little bit of red candle coming over the 2 days or 3 days left. So let's see. And weekend, it's also easier for the market makers that want to stop people out, because the big institution, they are not trading anymore on the weekend. So the liquidity, the order book is much thinner. It's much easier, and they would spend less money to go to for their targets. So that's basically my move.
And us, sorry to add on that, and us, the retail traders, normally go into set it and forget it mode. So you tend to look at it and say, well, I have to go do stuff with the family, so I'll put a stop limit in there, and that just kind of makes the equation for them easier to calculate.
It always happen like maybe all time 6 p.m. When you have something to do, when you are busy doing something else, and they do this kind of moves. Like, have you ever felt that they are watching you when you trade?
Yeah.
Like when you left your screen, and then all the action happen. And
I want to put a little sticker in front of the camera and just say, "Leave me alone."
Yeah. I don't know about you guys that are watching this episode. I don't know. Let me know if you felt that they are watching you through the webcam on a computer, because every time you're not paying attention to the chart, they make this kind of move.
That can really hurt you.
Yeah.
But these are the things that you need to take in consideration for the weekend, guys. And if we do that, Lee, maybe we can flip to the weekly quickly and just sign off. What would we want to see? Because I think that's kind of the next big question.
Well, if I'm bullish and I want the price to go up, I need to see some kind of bullish momentum. And for now, I would say, let me go to another chart. I'm not going to put this one on. I would say short term, the momentum is more on the bearish side. I don't know if you agree with me on that. And this candle here on the weekly, if you close weekly like this, it doesn't look good to me. Even this candle here, if you read this candle, what do they call it? An hanging man?
But it's a reversal pattern at that stage.
Yeah, and that's a reversal.
And if you look at this, and I were to tell you that this is a 15-minute candle, and we were to draw a trend from the low there by July, where we had that 29 buy, and you draw a trend, and you take the trend in the mid of September. Can you quickly draw a trend line in there for me, Lee?
Where to where?
From the bottom in the first quarter of July, yes. And if we were to look at this, and remember, a trend line is nothing other than a moving average, guys. So if we were to look at that, and we were to trade this, and this was a 5-minute chart, what would I have told you? I would have said, well, wait a couple of 5 minutes till we're closer to the trend line to make a decision. So it does not necessarily mean that we're going to dump all the way down to 40 or get heavy bearish. We're not bearish. It just means that where we are now, it's natural to expect some indecision in the market, some uncertainty. Everybody's waiting on everybody to make a move, and which means the market is just going to sit there in limbo, and the market makers are going to just come and punish people for it.
Yeah. So let's wait and see. And I think if you have to go to check this, let me show you these two.
Do you own a piece of Mars there, Lee?
No. This is this is only I can't find this website anymore. Where I used to watch this auction close. I think until the end of the month, we should be still, the max pain area will be still like 62. So I think for the next 2 weeks, price action, we should stay a little bit between this range. So yeah.
yeah, that's kind of the takeaway. So the nice thing is going into the weekend, let's just be safe. And Lee, let's maybe park this Bitcoin discussion unless there's anything else major you want to share. And let's start looking at people's questions, because we still have enough time to actually get through some really solid questions.
Yeah.
Okay, so I'm gonna, when you say closing, which end of the time zone are you referring to? Lee, I'm going to hand that over to you. The nicest tool out there, though, is already in your trading view, and it's ticking right there on the screen.
At the bottom, you have this time zone. So you have to select in which time zone you are. And the daily close, I think the daily close on TradingView, the candle is the same everywhere, no? I mean, on our side, it's closing at 2 a.m. in the morning, that daily candle.
So basically, if you look at the world map, it's when we're right at the far western side of it, and then when Asia time starts, when the east opens, that's kind of where the daily flips over. So look at your time zone, and for us, we GMT +2, so that's why it's going to be 2 a.m. for us. If you're in I think in London, Europe, it will be 1 a.m. and so forth, closer to the west coast or the western hemisphere. That will be, closer to your time. So that's just how it works. But it's important info, but because it's an agreement. That time closing is the world making an agreement saying that for the period of a week, everybody kind of agreed to the fact that that's fair for value for where Bitcoin is at the moment. And that's significant. So the larger time frame candles, the higher they close and the bigger they close on these key levels, although we still see shorter term bearishness, it's a big deal because it's an agreement that we kind of find with where Bitcoin is price wise. Lee, so there's another question here for you. Which indicators are you guys using for placing a trade?
RSI, that's the only indicator basically I'm using to place, that I'm using personally. I only use RSI and the charts, basically, nothing else. But I'm trying to build some other indicators, but those are not like, the indicators that you can find on the public library. The only reason is I believe that the more you use the indicator, the less it's going to work. Basically, if everyone is using the same strategy, it just won't work.
Simple
So
as
I'm
that,
trying to
guys.
build
So
something different. Yeah.
So I see here there's another one. What's the significance of a red-green candle close? And do you wait for candles to close before putting a trade?
I don't know how to answer that question. If I'm waiting for divergence, to confirm a divergence, yes, I will wait for this candle to close. But quite often, I anticipate this move. So I will take a trade before the candle close by anticipating that I will see another bullish divergence or bearish divergence.
So
And if I don't see it, then I try to get out as soon as possible.
yeah, or flip into smaller time frames to see if we're starting to lock in sort of a level, because that's where time frames become your friend. Remember, if we trade investment wise on the daily and we look at these things, sometimes I want to at least just know. I don't want to sit for another 8 hours during a dump to find out it's going to go. So the 4 hour would start, or the 8 hour would start showing you signs of it. Then the 4 hour and all the smaller time frames. And then slowly but surely you can ladder yourself back into the daily where you say, okay, right, the daily is saying we want to bounce at this area, and the smaller time frames are aligning. So now I can start narrowing down my entry. And we do that especially when we leverage trade, not so much when we spot trade. I want to quickly bring up my screen, and I've got a couple of questions that I just want to highlight that got sent in through the Twitter. And I'm going to start here, and I want to just bring your attention to these type of things, guys. Remember, these are the type of guys that we can see and we can block. So please don't ever get stuff don't look for free coins and stuff like that. That's just spam. They're going to get your details and they're going to rob you. Okay, right. So I've got a question here about. Let's quickly have a look at this one. On your idea of getting 10% a day, if you use a very small amount of leverage, would it make sense to do a 2x, then only need 5% instead? And the question that I actually want to highlight, and it's basically this part of your sentence. On your idea of getting 10% a day, I have never, ever, ever wanted to get 10% a day, guys. So please do not take the $100 to $1 million as a 10% a day trade thing. And as a general rule, never trade to a percentage gain goal. Lee, we've done this a lot where we've felt like, we just need to make a little bit every day and then we'll compound our way in. But because you are doing that, you're forcing yourself sometimes taking trades that's a little bit more riskier than others. So try and stay away from that.
I think you have to zoom out a little bit. Don't fix your target. I need to make 1%, 2%, or 10% a day. But to have a target a month, if you put yourself a target with 10% a month, that's already like a brilliant achievement as a trader.
And
10, 20% a month, that would be great. And I don't think no one can ever make like 10% a day. I mean, that's huge, 10% a day.
That's it. And then the second half of it is, and would it make sense to do a 10x? They need 5%. So what I wanted to ask is, would it make sense now to leverage to try and get it? But the second half of this is the risk. So your strategy, and that's what Lee was going to try and go to. So I'm going to leave you to shoot it out there, Lee.
Well, you said it perfectly. It's about risk and reward ratio, and where your stop loss are. If you put yourself a limit of 5% stop loss, but your setup allow you 2.5% risk, then actually you can go on 2x leverage, because if you lose double of your 2.5% of the risks that you have as per your setup, then if you lose a trade, you will lose 5% on your trading portfolio. So for me, leverage is not like such a big danger. It's just you need to know how to manage your risk and how to deal with those numbers. If you have a setup that will tell you have like 20% of risk if you lose that trade, obviously you cannot put $100 in your first trade, because if you lose it, you're gonna lose 20% of that $100 at your first try. So now, if you allow yourself every trade 5%, then you need to divide your $100 by 4, for example, and you have to put only $25 into that trade with a 20% risk. So it's all about risk management. It's really not about the leverage size. It's all about risk management.
I've got an idea. Literally, just thought about it now, and I think you're gonna like it, Lee. Maybe next week we do, within one of the episodes, we go through and we do a proper risk management, and explain to you guys how we go about it, because it's always boring thinking about planning risk management. It's the sucky part of trading, because it's like doing the admin, but it's the most important part. If you don't do admin your business, you're never going to know where you're making money or you're doing business at a loss. So I think let's try and work it in next week and see if we can get a little bit of a run there, and that will help you guys. And I just want to reiterate this. I saw another comment, but you shared it on a compound where it was daily. I think it was from Lily, this one. Please don't, go and have a look at that video again. I used that website purely as a calculator. If you were to compound 10% trades over 100 trades, and that was the only idea. The market sometimes will give you 10% trades in one day, and it can give you 10% trades in 1 week. And you cannot have a strategy that forces you onto a specific a trade winning goal. What's going to happen is you're going to have days where there's literally just nothing. You sit on your hands, pick your nose, or go play with the dogs. It's all up to you, but you're going to have to learn to live with how the market moves as well. Lee, any questions on your Twitter that you maybe want to highlight?
No, I haven't looked at my Twitter.
Quickly go check your Twitter. I'll quickly
Why?
read
There's no more.
another one from mine.
Is there no more question here live?
There's a lot of questions. I just want to do at least two from the Twitter guys as well, and so forth. Just to kind of see if I can get a fair balance here. We asked them to write them in as well, so I don't want to not read any of them. I'll do one quickly. I said I want to know what's the difference between support and resistance, and supply and demand. And then the second part of the question, should we use open interest and funding rate while trading? If yes, how? So I'll take the first half of it, and then Lee, I'll ask you to do the second half, because that's kind of your forte there. Support.
Sorry, I was not listening to you. Support and resistance and supply and demand.
I'll bring the screen up. Don't worry, but I'll bring the screen up for you. And
no, go ahead. Answer your question.
Let me read it down. Okay, so this was the question, and what I said about this first part is the difference between support and resistance. Support and resistance is a psychological agreement amongst everybody in the market, whether it's fair price or whether it's overpriced. That's it. Think about buying a 2002 BMW 3 Series or a Toyota Hilux, whatever the case might be. There's a kind of agreement when you look at that vehicle. That's resistance. No matter how well it's looked after, if you go to a classified or you look at that second-hand vehicle and somebody goes and says $400,000 or rand or yen or whatever currency you are, and it's ridiculous in relation to that guy priced resistance for you. It's a position where you say, I won't buy this. And that's what it is. And the same thing for support. At some stage, all those guys that priced resistance, they were too expensive, is going to want to cut their prices in. And support comes in when everybody that was not willing to buy goes back and say, hey, this is actually now a good deal because I can buy it, I can service it, I can replace the tires, and I'm actually going to walk away with a nice profit, and I might be able to drive it for a year and sell it at the gate. That's support. That's what it is. Now, supply versus demand is a completely different concept. Supply is at that position when all these players want to sell their vehicle. So it's kind of when the warranty ends. That is when supply comes in. And demand's the same things when the new model comes out, and people want to buy it. That's demand. So those are the two concepts, or the four concepts I want you to take away from this. And then the second half of the question, Lee, for you, should we use open interest and funding rate while trading? Yes. If yes, how?
All depend on what kind of trader you are. Small time frame, definitely you have to pay attention if you do leverage trade. I use it a lot, just because I understand Elliott wave strategy, but the thing with Elliott wave is it gives you so many different possibilities. At any given stage, you can ask different Elliott wave trader. They will give you maybe another count, a different count. And that's the beauty of the market. And everyone sees something different, and we are trading against each other. And the funding rates and the open interest will tell me where is the money, what are the market makers looking at, in terms of statistics and figures. We have this data through a few websites that's giving us those data, but imagine they will have those things live from the exchanges sometimes, maybe, So they will still have an advantage compared to us because the data that we're getting are delayed already. But it will help us to see it. It will help me actually, at least to see where the money is, where are the money, and with that I can plan my move with the Elliott wave or with other techniques, and in order to go to this area, and basically I'm putting my buys where the other people are losing their trade or they're getting liquidated, or my sells when the other people are forced to buy it. So small time frame, yes, but bigger time frame, bigger time frame, leverage or not leverage, they're just those moves are really quick. They take the money and then they come back to the original point. So on a spot trade, not so much.
Yeah, but the easiest takeaway from this is if you think about it, the best deal you're ever going to get is when somebody's wife tells them you have to sell your golf clubs today. That's when you're going to get a great deal. And that's these extremes that Lee is talking about. That have to is a stop limit that's being hit on a leverage platform, that promise to buy or that promise to sell. And that's where you want to buy, because that's the deal you're going to walk away with smiling. You don't want to be buying it when it's been sitting for 2 weeks on the floor. And that's why when we look at the charts and we look at the way that the candles print, I'm going to bring up your screen. Can you maybe flip to a Bitcoin chart there, if possible? That's why when we look at trading and when we look at investing, we might be looking at the same targets if the time allows for it. But generally, what we would want to do is, when you look at this chart over here, and this is the frustrating thing, because we can't really draw on each other's screen. We still need to find a tool. So if you guys know of something that allows me to draw through this onto Lee's feed, please send us a DM and we'll get that. But in any case, if you can look at all that sideways area, that's when it's just sitting on the floor. That's fair price. And you look at those peaks, that's where you want to buy. When you look at the dips, that's when you the peaks, that's when you want to sell, and the dips, that's when you want to buy. That's when you get to that point where somebody's forcibly taking action against their will and at a loss. People might be shorting and getting out there, and people might be buying, taking along, getting stopped out. At the top and at the bottom, that green area, people might be getting stop limit out of their longs, and that's kind of when you want to get into this. Okay, I hope that makes sense. I'll try and next time have a tool so we can actually scratch on the screen. Next question. Why do some traders use logarithmic and others don't?
Okay.
Give it to you, Lee.
Logarithmic, for me, you use it on a very, very long time frame. When I studied the Bitcoin chart from 2010 to 2020, we have to use logarithmic. Otherwise, you won't see much more with the price action especially from the beginning. But short time frame, like on a 15 minutes, 1 hour, 4 hour on a daily chart, we don't use logarithmic. Rodo, if you want to tell us what is logarithmic chart actually?
Okay, cool. So guys, the logarithmic, if you think about it, if you look at this chart and you look at the Bitcoin pricing there, so it says 61,000, 62,000, and the scale at which the candles are printing is based on the price value. When you flip to logarithmic, that scale is going to change based on percentage gains. So you can't get it wrong either way. It's just, if you look at logarithmic now, you start zooming out, the size of the candle is going to be printed in relation to the percentage gains you would have had instead of the dollar gains. And that gives us sometimes an indication of exactly how it is, because now if you look at that, each one of those moves may be made 1,000%. But if I have to look at it in dollar value, that the first two spikes that we have to the left-hand side is flat. It seems like it was insignificant. Nothing happened. A long, boring consolidation, because the price bracket, the dollar value, was still so small. It was the same multipliers, the same emotions, the same fear, the same greed. And that's why the logarithmic is a powerful tool.
From here to here was like 0 cent to $1. $1 here, Bitcoin price.
Yes.
But you have the same proportion here from 3,000 to to 60K. Same as 100 to $7. Basically, back then in 2011, 12, and 13, when Bitcoin price moved from $1 to $2, is like what you guys are experiencing when Bitcoin is moving from $30 to 30,000 to 60,000.
Exactly. So, right, let's have a look at the next one. How do you confirm a breakout and protect against a fake out, so you don't make the mistake of buying too early or too late on a breakout?
It's very difficult. You have to look at the volume. If you have big volumes, then it will certainly confirm a breakout. and fakeout comes without volume. But myself, I'm not so much of a breakout trader. I'm more like I don't know. I like to catch the perfect bottom or the perfect top. I want to be as precise as possible. So it all depends on what kind of trader you are, what kind of setup you feel more comfortable using. And for me, breakout trade has never worked percentage-wise, winning rate-wise, never worked so well. So I gave up the idea of trading the breakouts.
I like breakout, and the way that I look at it is volume. You need volume. That's the only way that you can do it. Breakout is a momentum trade, so your understanding of whether there's momentum in the market is key. And yes, if there's big volume, the momentum should hold, and the trade should continue. Okay, so if you're new to crypto today, what would it be best to wait for a dip before buying in for an investment? Asking for my dad is trying to catch this potential bull run. Lee, you've got a lot to weigh in on this one.
So if you only started today first, as investment, I would just say maybe the easiest strategy for investing in crypto is actually buying every little bit, every week, a little bit, or every month, and keep it constant. Forget about the price of BTC or Ethereum or whatever you want to buy. Buy like a good big, a top 10, top 5 coin, but buy DCA every month or every week. But you buy it regardless of the price when it's at the top or it's at the bottom. The reason for it is it's actually quite simple. When you look at Elliott wave or anything, the quickest wave is 1 and 3, and the longest wave is the number 4 and sometimes 2, where there are consolidations. So if you put everything in perspective in terms of time, you're gonna buy more often where the price is actually sitting at second wave, the second wave, the 2 when you're gonna retrace, or the fourth wave. But you will rarely be buying at the top, because that top comes only in 1 week on 1 day. So even if you buy the top once, but you're gonna buy 3 or 4 times where the price is averaging somewhere. So over a long period of time, basically you are averaging your buy at a very good price. And if it is for an investment, then over within the next years, 2 and 3 and 4 years, Bitcoin price should go up, and you should be very easily in profits.
And while we're on the subject,
that is without any techniques, right? You don't need any TA, you don't need anything. Just you need to hold when the price is going down, because you took it as investment. It's going to be for long term.
That's true. And while we're on this, we looked at another coin last night, that we would rather invest instead than in Bitcoin, because there's a time to this. Remember, there's 3 legs to a good investment or a trade strategy if you don't DCA and you take time to study. One is your fundamentals, you understand why. TAs is how you plan your risk, and third is timing, guys. Bitcoin's a brilliant project, but the timing maybe now is not the right time to invest. But this might be a better timed investment.
So if you take that example of DCA every week, you buy every week a little bit, you can see maybe there's 1 week you're gonna buy at the top, but most of the time you're gonna buy it at the bottom here. So naturally you're gonna average your buys in somewhere in this area even. And maybe today you still at the break even, but you have already saved and built up your nice bag on Bitcoin Cash, if that were the coin that you're gonna buy. And so for me, Bitcoin Cash right now, it's sitting at this DCA range. Okay, right now at 618.786, and we're holding this low, and there's big period of consolidation. And Ludo always used to say effort versus results. So if you look at where we're coming from, $4,300 for 1 Bitcoin Cash, and we are still sitting at 600 something. So would I rather buy Bitcoin Cash, or would I rather buy Bitcoin? Bitcoin has got a potential of 2x, maybe 4x, but within that time frame, Bitcoin Cash has got a potential of maybe, if you make it all-time high, maybe even a 10x. So I would, consider more Bitcoin Cash right now as we speak than Bitcoin.
And then while we were having this chat last night, we decided let's bring up the OBV. And
OBV,
that
yes.
really confirmed what we were thinking. And that's why we quite like this one for that reason.
Yeah. So OBV is another indicator, but I use it only for like long term. And if I have to choose a coin to invest, this is basically showing me that there is smart money involved in this project, and there are money in this Bitcoin, whether it's a Bitcoin Cash, whether it is a good service or good coin, a good project or not. I don't dive too much into fundamentals, but I know that there is money involved here. There are smart money that are in this project, that are buying basically Bitcoin Cash since July 2019, and they never left the train, even though no one was talking about Bitcoin Cash and there were no noise, nothing. So if they have put so much money into Bitcoin Cash, they will not let this project go to zero. They will make a way to make some money to get out of this to this coin somehow, and sometimes. So this is kind of information that you can get by looking at technical at the TA, only at the chart, using these kind of indicators. And then I'm just buying with them. No one knows that they're buying Bitcoin Cash. I haven't told Udo, I haven't told anyone, but I'm buying a little bit by a little bit because it's boring. No one is paying attention to this. But one day, when they're gonna pump, then yeah, I'll be happy, but I don't know when. But I'm just waiting for them to make this move.
Buy when unknown and sell when it's known, guys. That's the thing. Now, this is not an unknown coin, but buy when nobody's thinking about it, and sell when it's headlining, when there's news articles on it. Just something to keep in mind. Lee, buddy, are we going to do an example of one where the money is leaving? I can't remember. We picked one last night. I think it was, which one was it? I can't remember the name now. Can you?
Here, for example, here, I don't know. Just click on something that's on one of the list. Something that
we went through one where it looked exactly the same in candle-wise, but you can see it's leaving. Yeah.
Price is dropping. We haven't seen the floor. We haven't seen how low this coin can go. And here, the money is leaving the project. No one is putting money in it here. So the momentum is dying. The price action is dying. This is something that I will never buy. If I look at, but this is against Ethereum.
That's a
so maybe, maybe against USD is gonna be, maybe against US dollars is gonna look much better, But that's.
I think I can't remember the name of the coin.
Is that against Ethereum again?
I saw
another question in the meantime. I'm gonna look for this.
I saw it on. I was asked it yesterday night on a Twitter question, so I'm just going to quickly open up the Twitter because that's where I think I found the name. And no, it was a comment. I'm not going to find it in the comment section. Sorry, guys. Okay, let's move on. We'll get another example, but I mean, you want to see the OBV go up. That's the end just of it. If it goes down, you need to worry. Let's quickly scroll through the comment section. Can you comment on any books or sources? And while you do that, I'm gonna look for a coin name here that we maybe need to put a little.
I'm not a big reader. I hate actually reading books or reading newspaper. So, and maybe you can, Rudo. You like to read.
We can do that. I think what we need to do is we need to create a coin and call it DCA, dollar cost average. That would be a great coin. Right. Books. I like to read some books. I'm not too crazy on reading. The best book I read was Mindset, guys. That's the key. You can work with 2 lines and make money in the market. You don't need to make it complicated. The biggest mistake I made was to try and make it complicated. So I studied and then I lost more. And then I studied harder and then I lost more. And then I tried to study everything and then I lost even more. And when I read mindset, it's like all of a sudden I started making money. But now, guess what? I had all this knowledge. So I ended up using multiple strategies and finding my own one, developing my own one basically on that. So that's the advantage. But I don't want you guys to go through that main hardship. So best book, Mark Douglas. We touched on it yesterday. Get the mind right, guys. An athlete spends as much time practicing his kicking to the goalpost as practicing his mindset in believing that he can kick to the goalpost. Because that's the difference when it comes to that closing minutes on a game day. And he's got a stadium full of people surrounding him and they're booing him. And this kick is going to make whether his football team's going to win or lose. It's mind. It's nothing to do with how he strikes it. If he believes he can do it, he'll be able to do it. And that's what I want you guys to take away. So work on that. Other than that, the most expensive TA books, probably the best ones I've seen, because nothing really changed. For me personally, I went through Wyckoff first because Wyckoff explains how everything kind of fits in. And that brings bring into an Elliott wave. I haven't studied any Elliott wave books, but I've got Fibonacci Lee as my friend. So I've got a free Google button here when I have a question. And to add on to that, guys, start creating your own communities because that's how you learn. We really started accelerating and excelling within our own trade craft when we actually started trading together. So I would say to all of you guys, get a community. This is a team sport, actually, although the end results we're trading against each other.
I would just add on that is everything that you can find publicly, whether it's books, videos, and if it is viewed and shared a million of times, it's really not so good anymore. I mean, my best strategy is something that I come up with that by just trying, new things, not with money at the beginning. So we always need to backtest the strategy that you find and just have fun. I mean, how many times have you used this rewind button, Rudo, when you are training a strategy? So when we see something, this might work, then you go back in the past and then you use the strategy and try to apply like a machine basically and see if it works. So the best strategies that I'm using, my best trade is based on something that I found out. Guys, to give you a little tip. Yes, everyone knows this fib ratio, 0.618, 782, 3082, but you can see in those boxes, you can change those numbers. Imagine now 99%, 100% of the people out there are using the same numbers. The market makers know that we are using these numbers. Why can't you change it? Just try new things. And when you come with something new that works, now you can, have something that works only for you, and that will be great. And this is how I come up with something new on my own, basically. So I don't know, and that can change. The market evolved, the chart evolved, and then what used to work maybe 10 years or 20 years ago will not work anymore, and we have to come with new strategies.
That's it. Moving averages did work. But I find it hard to make money on it now if I were to use it, because literally that's the training wheel tool that everybody gets given when they start trading. And it doesn't mean you shouldn't understand it though, guys. So please don't say now because you first need to know. I first need to know how my opponent's going to lose. So what do I want to do? I want to see his gameplay book, because then I can plan for it, and that's what we do. So we've learned moving averages. I know Ikimoku Cloud. I know Bollinger Bands. We know all these things, how other people get tripped up. And then we sit and that's the part of why we want to do this, because it makes you feel better, because you on a daily basis, we're taking money from people that's losing money. That's trading. It's morally, it does not feel as comfortable, but everybody signs up for it. So, it's survival of the fittest. It's nature at its best. So, yeah. Guys, from my side, I don't have anything more. Lee, is there any last Last things you want to touch on before we can maybe sign off and close off the show?
No, I mean, don't get me wrong, guys. I'm not saying that you shouldn't learn, shouldn't read those books. You must read those books, understand what other people are looking for, and what the techniques they are out there, and then just you need to how do you call it? How do you say that in English? Tune the performance of those tools.
When we do the risk management, we'll touch on this and see how and show you guys how to bring it in. As now, let's quickly do a little bit of admin, guys. We built a Discord group for you guys, so please go and sign up. There's some news that's going to be coming through the Discord. It's not just a place where you need to go sign up and you just sit there. There is going to be some interaction happening soon, and it's going to be a great benefit to those that sign up to the Discord. Same for the Telegram. Please, the links will be in the description below, as well as the Twitch link and the YouTube link. So guys, please always, if ever you want to share something, send them to the YouTube or send them to our Twitter, because the links will be there. We don't want a chart artists or Fibonacci Lee with a misspelled O or something signing up, DMing these people and then taking their money. At the end of the day, that's the only horrible part of the space that we're currently in. It's very easy for somebody new to get tripped up in little things like this. That's it from my side. I want you guys to please have a lovely weekend. Please trade safe if you're trading, and spend some time. Balance is key, guys. Make sure you get some fresh air over the weekend. Don't get stuck. Golden rule that I learned the hard way: looking at a candle does not make it grow. Lee, over to you, buddy.
And does pumping your bouncing ball make the candle grow or not?
Neither.
Guys,
I bounced
on
through
that
these
note,
balls.
Thank you again for spending another week with us. Yeah, shout out to Stefan Stewart, Bit Lady, always one and first and seconds. Really appreciate your support. And yeah, I mean, we talk to you next week again. Thank you, guys.
So Lee, guess what? I'm all dressed for the beach, and now it's raining.
Are you gonna get stopped out on that one or not?
Yes, I'm gonna stop out. I'm not gonna go to the beach now. I'm gonna go.